It's constantly in the headlines, but is now the right time to buy a home in San Diego County? Is it the right time for you to list your house for sale and maybe take that next step into something larger? Or maybe it's your opportunity to downsize. Where are mortgage rates today? And let's say they do tumble. Can you or should you refinance? How much would that cost you? I'm Heather Myers, longtime TV news anchor here in San Diego, also a real estate agent. Let's dive in. I do want to bring in my guests to the show because I think they have interesting perspective. You probably hear over and over again that this is not the time to buy. You should wait. Well, I want you to hear what Mike and Tracy, Michael Kane, Tracy Campagna, the SD mortgage couple have to say. First of all, guys, thank you so much for joining us.
Thanks for having us, Heather. We're super excited.
Thank you so much. We're excited to be here today.
Yeah, let's just jump in because I want to help people in San Diego County specifically who are scared, who have been standing on the sidelines for years. They want to be a home buyer, but they're thinking, you know what? I don't make enough. I don't have enough. I don't have 20% down. I can't afford today's rates. Should have bought 5 years ago. Should have bought 10 years ago. What do you say to those people, Tracy?
Well, the first thing I say is you don't need 20% down. That's a common misconception. There are programs literally with zero down. Of course, one is VA, one is USDA, and then there are a lot of down payment assistance programs, especially in San Diego, through the city of San Diego, that we can help entertain and show.
Yeah, so Mike, do you just try to first of all, encourage people hey, I hear you, but before you rule yourself out, do you just tell people, hey, let's just look at your numbers first?
Yeah, I just say let's talk about your scenario and let's put together a roadmap. You don't know where you're going unless you have a roadmap to follow. So if we could put together a little template for them, talk about their particular scenario, at least they'll end the conversation with a little bit more education and then know that whether they can do something or can't do something or something that they can work towards.
Yeah, and I think that that's so important because maybe they're right. Maybe they shouldn't be buying right now, but at least they'll have a game plan as to when or what they need to do to prepare to buy. I don't think people even know to ask those questions, Tracy.
I think so. I think what we'd like to do is do a loan application with a soft credit pull and upload their documents to our secure portal. And that way we have all the information and we can make a clear diagnosis without impacting their credit and without charging one penny to do so. And they'll get a really great idea, a blueprint of where they need to be at with their credit score, if their income, with savings, down payment, and closing costs. And then they can decide from there if that is something that they're ready to do with their family and their personal situation.
Or we can come up with some creative solutions, like putting your sister on as a co-borrower or your family, or maybe even moving in with some friends or family. All different types of solutions can come up just from a conversation.
Absolutely.
Yeah, just get that ball rolling. What sort of interesting, and I'll throw this out to both of you, what sort of interesting loan programs are available that people may not realize are even out there?
Oh, you should talk about that.
I'll start with this one. So we're seeing a lot of interest in the San Diego Housing Commission or the San Diego Housing Authority. They put together some good down payment assistance programs. They do have some unique qualifying, so we have to take a really close, detailed look to see if somebody fit it. But the most recent one is the People of Color program, which is geared towards helping homeownership in the minority communities here in San Diego. Some of the stipulations include you have to have 1.5% of your own money. That can't be a gift. They do give you $20,000 for closing costs, and I believe another $20,000 or $30,000 for down payment. So it could be a very powerful program. And one of the reasons why I like it the most is it allows for the most income flexibility, where a lot of these programs are geared towards low income, which is it's nearly a unicorn to find somebody that may be low income and could buy in San Diego County. But that is one of the programs that's gotten some attention, in newspapers and media and the news. So, we have a lot of people talking to us about that.
I'll tell you my favorite one.
Okay.
It's the 3.5% down FHA grant that can be used on a single family, a condo, or a 2-unit. And you can use the money from the other unit to help qualify the rental income. So I like that one a lot. So it's a down payment assistance grant that's literally forgiven when you sign the mortgage docs. You never have to pay it back.
You never, okay. And that's interesting to point out because there are some state programs where you do have to pay things back. And I think
Right.
people need to be well aware of what they are signing up for when you go down that path.
We always bring up a separate calculator when we're doing a pre-approval. Just yesterday I did this and said, hey, are you in front of a computer? Bring up a simple interest calculator, just right from Google, and type these numbers in so you can see exactly what will be owed if you depart the property back to the down payment assistance provider. So we always make sure that our clients are very aware of what they're getting into. However, we do have one that doesn't need to be paid back, and that's my favorite one.
Okay, good to know. Okay, so what about for people who might be looking, and I think Tracy, you might have even sort of touched on this, but for an investment property, maybe they currently own a home in San Diego and they have some equity in it. They're thinking about getting an investment property. What should they know, or maybe what programs are available for them?
Well, we do have a basic investor program, and that does require 20% down. However, tell her about it.
There are some unique programs for, say somebody owns multiple properties, they don't file traditional taxes, or can have a really complex scenario with multiple businesses that they own and they don't want to provide all the traditional documentation. There are called debt service ratio, or DSCR is the industry lingo for it, where they're just looking if the property cash flows, you can get that house, or you can buy that multi-unit. So it's more like a traditional commercial loan, which would be 5 units up, or commercial property, where the investor says, as long as this property breaks even or makes money on paper, we'll give you the loan.
But it doesn't have to be on 5 units. It can be on a single family home, a 2-unit, a condo, a 3-unit. So it's underwritten like a commercial loan, but it is also available for residential investment purchases.
Ooh, good to know. Okay, because there are people that would like to begin to build a portfolio of real estate, but again, in San Diego, it can be daunting. Good to know that there are some programs available. All right, for homeowners who are,
is there an Airbnb loan still?
Yeah, there's some Airbnb loans that would fall under that, and then just on top of that, there's just regular, like a traditional conventional mortgage where you put 20% down. And it's just underwritten with, what you make. You can add the rent from the property in for your qualifying.
Yeah.
So that's something that some people may not know that can help them, stretch their qualification amount when we're adding in whatever the market rent may be, or if there's already a tenant in it.
Okay. What about people who are looking to sell and either buy something larger, maybe their family is growing, or their children have left the nest, so to speak, they're ready to downsize? What are things that they should consider? What programs might be out there available? Kind of touch on that if you don't mind.
So we do have a program that allows our buyers to purchase a home before they're even selling, which can give them the upper, the upper leg on an offer. It doesn't have to be a contingent offer.
Nobody wants to make a contingent offer.
Right.
So this company steps in and provides a bridge loan. Where they take your equity, say your house is worth $2 million and you only have a $500,000 loan. They'll give you $1 million, $1.5 million. Say, here's your money. You can buy it for your next purchase. And then they'll structure the deal where we don't have to count the debt from the house.
Right. So you can essentially sell the home after you've already purchased, but already using the equity.
Already using the money for the down payment.
We use that a lot here in San Diego.
Yeah, I was going to say that's huge, because a lot of times when you're writing contingent offers and you're one of 20 people who have submitted an offer, the contingent ones get set aside and they're going to go right for the all cash offers, because they're not going to mess with you if they already have something, a bird in the hand.
Yes, exactly. And it's interesting that you bring that up with offers on one property. Some things that you can do to stand out that we certainly help with is quick closings. We can close in as little as 10 days. And really that does help your offer to stand out. Our mortgage contingency timelines are very, very tight as well. So those are just like things to help, get your offer looked at quicker. You definitely want to look at closing as fast as possible in San Diego.
Absolutely. Okay, good to know. Another point that people don't realize makes a difference when you're putting in an offer. So quick closings. What can people do now to start preparing to buy a home? What should they think about financially? What steps should they be taking before they even reach out to you guys?
I would say monitor your credit. Everyone gets a free credit report every year at freecreditreport.com. And I would say the first thing and the number one thing that holds clients back, even when they're ready to go, is their credit score. Not knowing what their credit score is, not really knowing what debt. Maybe they have a credit card that they opened in college, they never even remembered it. It has $10 on it that's been outstanding for 5 years.
Or the one that burns people is the annual payment that they don't realize, and they think they don't use that card. And they don't realize they're about to get hit with 30-day late because the annual payment got overlooked.
So I would say go on freecreditreport.com and pull your credit and see where it is. Most investors are going to look at least anywhere from a 620 up. Anything under that, we might still have options for, but you might want to try to get the credit a little bit better from there. And on that, I would say from there go to Experian Boost. Experian Boost can help raise your credit score for free by every time that you make an on-time payment, such as utilities or your cell phone or your rent, it logs in and adds it to your credit report.
Okay. And, looking at your credit, let's kind of dissect that a little bit further. Once you realize that, yeah, my credit score is not where I was hoping it would be, really not where I even thought it was.
Right.
Should they start canceling credit cards? Like what should they do in order to try to boost it?
Well, I would say don't start doing anything until you speak to a professional, because canceling credit cards can actually bring your score down if you don't have available credit to you. What would you say?
Just looking at utilization, you really want to have your utilization at 20 to 25%. So some people may think they only have a few $100s on a card. It's like nothing. It's not going to hurt me. But if your limit is only $1,000 and you have $500 on there, you have 50% utilization. It looks like you're overutilized for the amount of credit lines that you have available. So just little things like that.
Yeah.
Sometimes there's derogatories that may be false. Sometimes there may be some type of misreporting on there. So it's always a good thing to look at before you even get started.
Right. And don't start making assumptions that you know better. Talk to us, a mortgage professional or a credit consultant, before you decide just to take matters into your own hand and start paying off or deleting, because we can kind of guide you in the right direction.
Don't close accounts.
Right.
Don't close accounts.
Don't close them, because the more credit you have available, the better your score is.
Yeah, that's a big misconception. Like, I'll just cancel all these credit cards. Okay, now you made it worse.
Exactly.
Yeah. Right. Biggest mistakes people make.
Well, credit for sure. Also for self-employed, maybe not showing a mortgage professional your tax returns, to review early enough. And of course, the self-employed, where there's always going to be kind of a difference of, where you want to fall in your tax bracket, what your expenses are. So I would say definitely meet with a mortgage professional if you're self-employed, to really get an idea of where you have to be to afford a home. Credit, we already touched on that. And what else do you think? Working with a discount realtor.
Working with somebody that maybe you didn't vet fully.
The realtor makes the biggest impact. The realtor will lead the train of the whole transaction. So if you're working with someone who really isn't going to get their money that they deserve by working so hard, they don't care.
Part-time.
Right.
So
really, you need to work with an experienced realtor that that
on a good team, and that you really trust, because it is going to be one of the most emotional transactions that you'll ever do. Buying a house, there's going to be highs and lows that come up in the process. So
right, and if somebody's part-time or they really just don't care about the transaction as much, that realtor could be missing from the whole transaction.
Oh yeah, no, I mean the horror stories that I could share, just trying to get a hold of people. I'm like, dude, do you not want a paycheck by the end of it? I'm a little confused on why you're very inaccessible.
We understand that. That's why we're saying pick somebody like yourself who's committed to the buyer, who's wants to close the transaction, and who's very educated on the whole process of closing a home on time.
If you're not friends with your realtor at the end of the transaction, something's not right.
Something went wrong.
We're family forever.
Yeah, you're going to be very close with your realtor by the end of this, and it should be something that by the end everyone's celebrating and they're popping that champagne and they're hugging because everything went. Expectations were set and everything went as best as it could possibly go. So, hey, how did you guys get into loans? Tell me a little bit about your story.
I think we both got into loans a little differently. I got into the mortgage business in 2012. Just had a friend brought me in, said he thought I'd be good at it. There were some refinance opportunities. And then from there, I don't know if the whole story, but Tracy and I met in about 2016. She was a loan officer at a different company that I wanted to work at. So we managed to cross paths, started working together. I got brought on eventually. It was actually right around this time, around the Super Bowl back in probably 2015 maybe, or 2016.
Mhm.
And then after a few months of working together, we started dating, and we're like, let's get out of here and move to San Diego.
Yeah.
So
Me, I just walked in to actually buy a house, and I spoke with a mortgage broker who was like, "Hey, you should join my team. You could do really great." And that was in 2000. So I've been writing loans for 24 years now. So I was 12 then.
Yeah, I was gonna say you started when you were 4. I see.
Yeah, exactly. But yeah, I think that writing mortgages and being in real estate is all about caring about your client, and just being always available and being a wealth of knowledge. And Michael and I both strive to do that for our client. We're very similar in that way. So it makes a really good team. But Heather, one thing I wanted to tell you, I get so excited. Rates are falling.
Yes, they are. And I think that's something that people need to be paying attention to, because even just over the last 48 hours, when the Fed decided to pause the federal interest rate again, they didn't decide to lower it like everybody thought. Maybe they will already. They certainly haven't raised it in month after month. But what are you seeing as far as rates go? Because it's interesting that the mortgage rates fall when the Fed does nothing.
Well, Michael, tell her why.
I mean, it's a pretty complex cycle. We'd have to maybe do a whole nother episode and geek out on what actually, is going into the market and why rates are so volatile. But, we're seeing rates down on FHA in the mid 5s, VA in the mid 5s, conventional low 6s. And this is where conventional, even maybe a month or 2 months ago was 8%. And it was really, really killing affordability and kind of slowing down the market. But we're seeing now with the lower rates, people more affordability, more people are okay with the payments again. And we're seeing more people come through open houses and bidding wars almost coming again here locally in San Diego.
And let's touch on that for a second, because there is a lot of speculation that the rates will come down multiple times in this calendar year. What do you guys think when you hear that?
We think that they will come down more.
I think they'll maybe come down around election. I don't see like them ever going to like 2 or 3, but maybe they can touch 4s. But I can also see them, kissing 6s as well. So I think it's going to be a volatile range, anywhere from 4 to 6, and people that get in at the higher rate. There's always refinance opportunities,
which we offer for free for any of our clients that did a purchase with us.
So,
yeah, you know what? Let me touch on that, because I think people are scared to lock in a rate, thinking the cost of refinancing in 6 to 9 months from now, if they did come down by a full point or point and a half, would I even be able to afford to do that? Give me some perspective.
They don't have to worry about that when they work with us. We take the cost of the refinance and internalize it. So there would be scenarios when there's zero cash to close to refinance and lower your rate.
Typically, I think it makes sense here in San Diego to look at a refinance, even with the drop in a quarter. Most of the loans are,
large.
750,000 plus, probably on average, if not even higher average. So a small percentage save, if you're not actually having to come with any closing costs, can save you a chunk of change every single month. You just ride the wave down and you lock yourself in each time in case there is any movement up.
That's huge, you guys. That is significant. So thanks for sharing that information, because I think a lot of people out there are going to look for an opportunity like that. Let me lock in now. If for some reason they do, take a tumble, at least I'm not on the hook for tens of thousands of dollars again.
We have clients, that we did deals 6 months ago that we're already taking advantage of the new dip that where we're at today.
Awesome. Hey, how do people get a hold of you guys?
They can find us on Instagram at SD Mortgage Couple, and they can DM us there. And they can email us at sdmortgagecouple@gmail.
And Michael at sdmortgagecouple.com, or Tracy 4 rates at Gmail. But I would say Instagram is probably our easiest method. Tracy monitors the inbox, and unless you go to spam accidentally, we should get back to you really quick.
I'll let people know. Guys, I really appreciate it. Tracy and Michael, the San Diego or SD Mortgage Couple, the SD Mortgage Couple. I'll make that crystal clear so people know right where to find you on Instagram. I appreciate your time. Let's stay in touch.
Thank you, Heather. Talk to you soon.
Thank you. Thanks, guys. And if now is your time to list your house, to buy the next one, maybe it's time to downsize, maybe you have questions about being a first-time home buyer, don't be afraid to reach out. All my contact information is right there on the screen. I'll talk to you soon.